Let's continue the conversation here as we're looking at gains of all three of the major averages. And for more on that, we want to bring in Malcolm Ethridge, CIC's Wealth Executive Vice President. Malcolm, good to have you. I guess, what do you make of today's move? We saw a bit of a rally yesterday after we got the huge sell-off on Monday. Today, we're posting gains with the Dow up just around 270 points. What do you think is behind today's move to the upside?
Yeah, so the really interesting thing is like the market is playing this collective game of chicken right now is the way that it looks, where nobody wants to be the one to jump out before anybody else, but we all collectively agree that like we can't go on this way for much longer. There's no obvious catalyst for why things are happening. And so like Monday showed us that there are concerns still about COVID. There are concerns now about Delta. And then yesterday and today's snapbacks basically to even have shown us that like nobody wants to be the one to say it's over. It's probably more than what we're getting than any one catalyst that actually makes any real sense.
But wouldn't the contrarian view be that this economy still has a lot of runway, even if it's not going to be the dramatic growth we've seen in the first half of the year? And we're on the verge of a potential funding from Congress through the reconciliation, if they get that through, that would actually give this rally perhaps even longer legs. Wouldn't now perhaps be the time not to be afraid?
Maybe, but I could make the argument that that's already baked in, right? President Biden came into the White House pounding the table and promising that there was going to be an infrastructure deal, and it was going to be the biggest infrastructure deal we've seen in a long time. And so a lot of people have been buying, especially materials related and industrials, based on that fact. And so it could be that the positives for that story have already been baked into the market, and the gains have already been made on the anticipation that we would get the bill that's finally seeming like it's going to make its way through.
Malcolm, I think investors are trying to make sense, or really trying to, I guess, best estimate the threat of the Delta variant and what that means for the market here, at least in the short term. Has it at all, the developments that we've gotten over the last couple of days, has it changed your outlook on the markets here, at least in the short term?
Not really. I think what's happening right now is the government is doing a very good job of keeping us happy. They're doing a really good job of moving the conversation beyond Delta and kind of telling everybody nothing to see here. Everything is all right. But I think Monday really showed us just how sensitive we collectively, right, the markets are to bad news around Delta and any other variants, and the likelihood that we'll see more shutdowns to come. And so I think, realistically, we have to at least plan for what if, it is as bad as India has shown us that it is, and as Europe has already shown us that it is, because we sort of are trailing what happens in the European markets, right? Which is why Monday, the market opened, we had a chance to see what was happening in Europe. And that told us, that forecasted what the day was going to be like on Monday. And then same thing with yesterday and today. And I think that right now what's happening is the messaging coming from like the CDC and folks in the know from the federal perspective is they're trying really hard to walk this fine line of keep everybody calm and cool and collected, so that we don't have a similar reaction all of a sudden one day, like we had back in March of 2020, where, the fear got real and the markets reflected it.
Hey, Malcolm, what do you make of this whole inflation debate? Because we heard from the Fed, Jay Powell, insisting that is transitory. Some out there that are a little bit more, I guess, skeptic as to whether or not that will hold true. It sounds like you might be on the case that maybe it's not as transient as we initially thought it was. Why is that the case?
Yeah, I feel like the resident skeptic now, as we've, going on with sort of what's not happening versus what we're being told. But I think that falls into the same camp as the federal government, the Fed, doing everything they can to keep us calm. And one of the ways that they're doing it is by pulling down everyone's fear around inflation, where they're saying it's transient, it's not going to be here forever. We don't really have to adapt and react to it the way the Federal Reserve normally is supposed to, because we don't expect it's going to last here forever. But ask anybody who's bought gas recently or groceries recently or any of those kind of staples. We've all seen the pressures of inflation already, right? And at the same time, we've got cash piles that are at historic highs, right? Everybody's hoarding cash right now. That's constantly dominating the news. And also workers can't get butts to fill. Employers can't get workers' butts to fill seats, right? So at a time when we have not enough labor, we also have way more supply of cash than we actually have goods to meet that. And so that's kind of the challenge that the market is trying to work its way through. And I think calling it transient is really underselling just how much cash is sitting on the sidelines and has the buying power to really, drive these prices up in the near term, sure, but also more in the intermediate term, 12 months plus.
Malcolm Ethridge, CIC Wealth Executive Vice President, thanks so much for taking the time to join us.